Good afternoon and welcome to Hit the Bid. This is Ty Robbie here with your Week 34 Market Watch. Today we're going to be running through our charts and seeing what happened across the markets last week and seeing what opportunities are waiting for us in the week ahead. So let's jump right in here. Get started with our October live cattle. This cattle market continues to show an impressive push up into record prices each week. We did see this market kind of balancing out here over the early part of August, trading in about a $7 range between this 225 to 232 area. So last week we were kind of anticipating that range trade to hold here after we'd already seen a pretty impressive rally from this recent test of this 50-day moving average up into what was prior all-time highs there at 232.75. This market had already seen a pretty impressive rally over the course of a 6-week span here, and this market just started to take a breather here as it was adjusting to these new all-time highs. But the demand continues to keep on coming in here as the bulls made sure of pushing this market back higher last week. We did see this market open up on Monday and Tuesday here, balancing out in some tight ranges, considering the recent action up here at the range highs. And then finally on Wednesday, we did see this market open up and just hit the ground running, pushing up there, breaking out of these prior all-time highs, having a nice strong close on Wednesday, which opened up to upside throughout the rest of the week. Good supportive action on Thursday and another push up into this all-time high here at 238.12 on Friday. Nice strong move here coming out of this range. Given the size of this range, we'd expect to see this market push up here to the 240 area at least. And from there, it's just kind of the cherry on top for the bulls, as we could see some high volatility swings up there into the 240s. With this market pushing up here and continuing to speed up, we could see volatility start to increase once again, like we saw during the course of this range-bound action. But at the moment, the bulls just continue to keep on running here. Little resistance above these all-time highs. This market's just going to keep on going here at the moment. And this big picture uptrend still remains intact. So in the event of any dips, we should see support come in all the way down here into the low 230s, as there is still plenty of demand in this market. We should see dips be bought up in the event of it. But with how we're rolling coming into this week 34, last week's momentum should just keep this market pushing higher. Look for these cattle prices to keep on cruising higher. Can go down the line here as we did see last week, most of the weakness being in these late 2025 contract months, being October and December, what's left on the board here. This market was a little bit stagnant early in the week, failing to get up into new all-time highs, while these 2026 contract months did see new all-time highs printing right there on Monday, making a nice strong 5-day push here out into these summer 2026 contract months as this demand just continues to keep on rolling in. A little resistance from here. We continue to see these live cattle prices continue to push up into new all-time highs. Jumping over to the feeders now. Last week we were trading this September contract. We did see the feeder market was where the strength was last week. This whole cattle market's been strong, but feeders are definitely leading the pack here. We did see Monday's action coming out, swinging right there above that 350 prior week's pivot point. We did see this market also trading range bound, but just had a little bit more momentum here in this feeder market than those fats. But Monday, leaving no question here, pushing out, putting in a new all-time high and closing above that prior all-time high there at 350 on Monday, and just nice steady upside, picking up pretty solid gains, 16 bucks along the way as this market shot up into 363, printing that new all-time high. As we head into next week, we do expect to see any bids above this all-time high just keep on running, as there will be little resistance from here. Look for the speed to pick up and volatility to increase as this market just keeps on running here over these summer months. One thing to keep an eye on as we do head into next week is we are seeing volume start to roll out of the September contract. We do see volume starting to decline late last week, and we are seeing that volume step in here in this October contract. So this will be the new front month that we'll be focusing on from here on out at Hit the Bid from here on out. So just wanted to review last week's action here on September and be looking out for this October contract, which numbers are pretty similar here. The bids above 362.77 here should get this October contract rolling higher. That 349, 350 level will be pretty similar here on the September and October contract. But as volume is outpacing September here now on October, we will be focusing on that going forward here. Fall feeders all down the line here, showing strong demand. Nice strong push out here into these early to summer 2026 contract months as well. Nice strong demand. This market doesn't look to be slowing down anytime soon. Look for these cattle prices to continue climbing higher. Over to the December corn futures. Coming into last week, we had seen this market starting a little bit of a relief rally after hitting some new contract lows down there at 392. This market had seen a pretty sustained downtrend here over the course of about a month here after this recent visit of this 20-day moving average. We did see resistance pushing in, a nice strong push lower down here, undercutting the $4 mark, hitting some new contract lows throughout that late July and early August period. We did see just a nice strong push lower in these corn prices. So a little bit of a relief rally here over the last couple of weeks was to be expected after hitting some oversold levels. Last week we did see Monday through Wednesday's action just balancing out here right below this 20-day moving average, as there was a little bit of resistance stepping in here from this prior breakdown on the news day before snapping above it here on Thursday. Nice strong push up here into this prior supply zone. We did see Friday pretty tight range here, a lot of volume getting built up here in this 410 to 415 resistance area, supply zone. These prior swing lows, this build up here before the breakdown as well. Lots of leftover resistance here that should continue to push this market lower. Any pops above this 413 and 3/4 bull pivot, we expect to see resistance sell this market off and push it back down here into this resistance zone, and then any offers below 410, we'll see this corn market continuing to push back down into the high $3 mark and looking for new contract lows again. So look for the bears to continue this big picture downtrend in this corn market next week. And next up, we got our crude oil prices. Pretty quiet market over here, really low volatility, not a whole lot of excitement here. This oil market continues to show very little volatility and no real reason for a directional move. Price continues to be comfortable in this mid 60s area. This is a spot where this market just seems to be the most comfortable here throughout the last year or so. We have seen this market push all the way down last week during this rollover period. We did see this market roll over from September into the October contract. We did see this market balancing out early last week before a little bit of a relief rally up here into nearing the $64 mark. We do see this declining 20 and 50-day moving average hovering just right here above where price is currently in the mid 60s. With last week's little bit of a relief rally here, we expect to see resistance hold in the mid 60s area. As this big picture downtrend should keep pushing this market lower with just a nice slow bleed. No big directional moves anticipated at any time here, but just a nice slow drift down here back towards the $60 mark is what is to be anticipated here in this oil market. So look for that slow bleed lower to continue in the week ahead. Next up, the equity markets. We are seeing each of our indexes posting a pretty solid rally last week as this market jumped right back after early week sell-off. The S&P selling off throughout Monday through Thursday's action, balancing out here in this 6460 to 6500 area. These pivot points will remain the same for this week. We did see this market break down below 6460 last week, showing a nice flush down here into this 20-day moving average, undercutting it briefly before balancing out on Thursday's action. Friday, we saw this market come out and catch a bid right away, just rolling higher. And nice soft talk by Fed Chair Jerome Powell also may have fueled a little bit of this upside as well, but this market remains resilient, plenty of demand here, and these any dips should be expected to be seen as buying opportunities. Nice support at that 20-day moving average. We have seen money flowing out of the tech sector a little bit recently. That's why we've seen most of the weakness come here in the NASDAQ, as it didn't quite reach that 50-day moving average, but it came the closest out of all the indexes. Seeing a pretty strong sell-off early last week, breaking down, pushing back, finding support here just right, like I said, at that 23,000 mark, just right on top of that 50-day moving average. Nice push back above the 20 here on Friday. We didn't see as big of a rally here in the NASDAQ. Like I said, it has been the weakest, but these Dow stocks definitely showing a nice potential breakout here. We have seen this 45,200 mark be the current or most recent all-time highs, as well as a key resistance level being hit multiple times dating back to December of last year. These multiple touches were just begging to be broke here. And last week we did see this market not see as much downside, but a brief test of the 20-day moving average on Thursday here on the Dow was all the support it needed, all the downside it needed here before the nice breakout move on Friday. Nice strong above average volume here, closing up at new all-time highs in those Dow stocks. So definitely seeing the money rotate around this market for sure. Less in the stock market, less in the tech sector here at the moment, and more over into those Dow stocks. So, but this market's still showing lots of demand. Dips are expected to continue to be buying opportunities, and be looking for good deals out there as this market remains very favorable to stocks, and we should see the upside continue up into new all-time highs here throughout the rest of the year. That's all we got for our charts today. We do have some news coming in next week, pretty minor stuff, but durable goods orders and consumer confidence coming in on Tuesday. Inventories on Wednesday for that oil market, but little to be expected in that low volatility market. Some jobs numbers and GDP coming in on Thursday morning before the open, and those are going to be some of the biggest news events for the week. So be ready for some volatility maybe to step in surrounding those news events, but very little to be expected as this market should just keep on continuing this uptrend higher. Cattle prices are expected to keep on climbing. Look for resistance to start to come in here on this oil market, and other than that, this corn market, and very little excitement over in that oil market. So that's all we got for this week, and we'll catch you tomorrow night for closing comments. Thanks.